Brian Stevens here with the National Real Estate Post. I want to let you know that cash out refinances are a great play right now. So are purchases for self-employed people. Did you know your average self-employed person makes twice as much money as your W-2 employee? Go where the money's at. Self-employed people and cash out refinances. The way to do this is with bank statement loans. The people to use, the company to use is Oak Tree Funding. They've got great pricing. You only need 12 months bank statements, and these guys will turn your stuff fast. I'm telling you, these guys are second to none. If you want to learn more about the product or the marketing of the product or get signed up with them, all you have to do is click this banner right over there. So the Fannie Mae survey of Homebuyer Sentiment sucks. It truly does, and I don't use that word lightly. See, the percentage of Americans who think it's a good time to buy a home fell to an all-time low in January, with rising home prices and interest rates exacerbating affordability issues, according to a survey released this last Monday by the mortgage giant Fannie Mae. And only 1 in 4 in the survey thought it was a good time to buy a house, and younger consumers, more so than other groups, expect home prices to rise even further, and they also report a greater sense of macro pessimism. These are the people who should be buying houses right now, and they're falling out big time. Not really good news. Well, here's something else that's really fantastic. Should just warm your day up. Agent commission just fell. Thank God you're getting sued for your commissions right now. Now, between the beginning of September and the end of November, last year buyer's agent commission averaged just 2.63% of home sales prices. That's down from 2.69% 1 year prior. It was also the lowest point in all of Redfin's data on commissions, which goes all the way back to 2017. So you guys see, you have to understand this. Homebuyer sentiment is just a symptom of an illness. Agent commissions going down is also just a symptom of an illness. In truth, our record low foreclosures, which is also going on right now, they're not good, they're also a symptom of an illness. The illness is the actual housing market. This is not good where we're at right now, people. See, agents' commissions going down is proof that they're just fighting for fewer scraps on the tables. Homebuyer sentiment is proof that there just isn't enough inventory out there and prices are too high for buyers. Foreclosures being down, of course, too much equity. And you heard me right there, too much equity too fast. Now, if you think I'm wrong, what happens when you make too much money too fast? Think about this. You ever hit a jackpot in Vegas? How much cash do you have in your pocket the next morning? Same principle holds true with our equity.
And it's gone.
What?
It's gone. It's all gone.
And I'll tell you what else ain't helping right now. Jenny continues to streamline FHA modifications. On Friday afternoon, Jenny Mae issued a new moratorium stating that they're streamlining its documentation requirements for servicers participating in the FHA Advanced Loan Modification Program. Now, I'll tell you what they need to do. What hell, everybody needs to do this. We need to put a moratorium on all modifications. Quit doing these things. Why? Well, here's your choices. Screw the investor on that mortgage-backed security out of the interest and principal on someone who didn't make their payments. So when they don't make their payment, it also screws the servicer who's responsible for that unpaid payment, and it also screws all of us taxpayers who are subsidizing for those missed payments. Or the other option on the table is we put a moratorium on all modifications. We create more inventory when we do this because we're just kicking these people out of their houses and putting somebody new in that house that's actually going to make the payment. And in that process, outside of the fact that there's no modification, the taxpayer, the servicer, and the mortgage-backed security note holder are all not screwed. Lots of good comes by kicking these people out of their houses. You're so mean, Brian. No, we're all too soft about it. It makes too much sense to not do the modification. Now, here's what all of you need to do, you lenders and real estate agents. Yeah, agents and lenders need to start working your asses off. Calling, yes, calling your databases, working neighborhoods, knocking doors, shooting videos, sending emails and text messages, open houses, let's do those too. And lenders, like I said, you need to do the same thing. Seriously, we need to make a run at all the inventory that's out there right now, not just what's for sale. I like... Manufacture leads where they simply didn't exist before. Manufacture listings, manufacture buyers. You can do it if you work, and the last time I looked at it, work generally requires work. See, when you guys work really hard, you act as a booster shot for a sick housing market. And I'm telling you, this isn't going to end well for our industry if we all don't start doing our jobs. Hey guys, if you haven't watched before, make sure you subscribe. You'll get it every day in your email, and we're not going to spam you. And if you like what we're doing over here, because we provide it for free, just push this out on your social media and let other people see it and keep the conversations going. With that said, you guys have a great day, and we will see you, Wednesday.